I just invested in Gumroad's open public offering at a $100 million valuation, and I joined over 5,000 investors. The campaign opened today on Republic, and within minutes, thousands of investors were piling in. By the time I invested, there were over 1,000 investors already in the campaign, and now at the time of recording this video, I think the campaign is just about filled up. So congratulations if you're able to get in on this deal. In this video, I'm going to explain exactly what Gumroad is, why I invested in this company at a $100 million valuation, and at the end of the video, I'm going to explain from a technical level some things that you need to look for if you're considering making a startup investment. Let's kick things off with a quick overview of the business. Gumroad is powering the online creator economy. It's a platform that makes it simple to sell online. It launched in 2011, and since then, creators on the platform have sold more than $390 million in products and services. In 2020, they processed $143.8 million in sales. Customers who use Gumroad include writers, designers, coders, comic creators, musicians, stand-up comedians, photographers, and more. This platform serves the creator economy, which is absolutely exploding right now. Now, if this sounds familiar, you might be thinking of a similar platform called Teachable. And funny enough, this is actually a website that I use myself as a creator. I have an online course and I love Teachable. I also love Gumroad, and I think they're both going to be massive. If Teachable was raising a public round, I would invest in them too. Keep in mind, Gumroad is still a private company, and I was able to invest in this round through something called regulation crowdfunding, which basically means private companies can raise up to $5 million online from anyone in the world for as little as $100. Now, I want to make it very clear that this is an investment, and this isn't simply a donation or a typical crowdfunding round. If you guys are interested, I made a video specifically on the differences between crowdfunding in traditional sense and equity crowdfunding. This campaign is equity crowdfunding, meaning it's a full-on investment, so make sure you check out that video I did that really breaks that down. This regulation crowdfunding is a big deal, and today, March 15, 2021, was the first day in history that private companies can raise this much money from the general public. It used to be $1 million, now it's $5 million. This change from $1 million to $5 million is a really big deal, and while it may not seem like a lot, who am I to say this? Hear from the CEO of Gumroad himself, where I joined him on Clubhouse in a room during this campaign where he talked about how significant this is.
But I think this is a really, really, really big deal. I don't think people really understand how big a deal this is. And I'm putting my company where my mouth is, you know, like I'm hopefully putting real skin in the game and showing people that I believe in it, and we'll see.
As you can see, this is no joke. This is a big deal, guys, and this is the future of investing in startups. Now, I want to talk about the deal terms of this investment, why I made the investment, and to do that, we're going to head over to the whiteboard. I invested in a SAFE at a $100 million valuation cap. Now, all a SAFE means, it's an acronym short for Simple Agreement for Future Equity. So anyone who invested in this round didn't actually own part of the company per se. You're still an investor in the business, but the company has to raise an additional round of financing. It has to be a qualified round, and in this terms, it was $10 million or more. So in the future, the company raises over $10 million. That will trigger conversion, and this SAFE agreement will actually become an equity position in the company, and we are protected underneath the valuation cap, or at the valuation cap, which is $100 million. So for example, if the company were to raise $100 million at a $1 billion valuation, my equity position would be 1/10 the size if there wasn't a valuation cap. So the cap is really designed to protect the investors. There's also a 20% discount to whatever valuation the company ends up raising in the future. Now, when you're breaking down any type of an investment, early stage, or in the public market, there's a few things you need to pay attention to, but they're particularly important when you're looking at a startup company. And these are the problem, the solution, the market, the business model, traction, finances, you look at the team, and you need to have a very good understanding of each of these different sections. And this is a little bit different than analyzing a company in the public market, because in the public market, yeah, the team is important, yeah, the market's important, but you need to look at the financials, and the valuation has to make sense. We're gonna talk about that, but firstly, you have to understand the problem. So when we look at this company, Gumroad, what is the problem that they're solving? And you have to fundamentally understand this. I think the problem in this particular company is relatively simple to understand. There's 10 to 100 million plus people around the world who are creating valuable digital products but it's really hard to actually sell these digital products online. If you have a physical product, there's awesome platforms like Shopify and WordPress plugins that you can actually put a business online and sell something relatively easily. But when it comes to actually selling a digital product, and if you think about the creator economy and all these digital artists and YouTubers that are trying to put out their product, which is maybe themselves on video, into the world, and maybe they've built a course or some other digital service that they want to provide, it's really difficult to do that because you have to build a website, you have to handle payment processing, you have to do this whole customer relationship management, and most people are not developers and they don't have time to really build all this stuff. So the problem is just this chaos. And the solution, what Gumroad provides, is that website, that payment processing, and the customer management. And so it's a really easy to understand product market fit and also problem solution fit, because it's very easy to understand, yeah, if I wanted to sell a course, I don't want to go build a website. I don't want to, build an integration with a payment processor. And then what happens if I want to email all these people? What happens if I want to segment this list? And so to be able to do that all in one platform is a huge value add. And the market is huge. This is called the creator economy. So we talked about creators, whether they're here on YouTube or any other platform, and they're building an audience and then being able to monetize that audience. So if you're an artist, being able to take advantage of the skill and the audience that you've been able to build and build a business around it and be able to continue to do what you love. And that's why I wanted to support this company, because it really makes a lot of sense. And I see not only this company, but competition, which is actually a good thing because the creator economy is growing at such a fast rate. Now, how did this company make money? The business model, you gotta understand every investment's business model. It's actually a freemium model where you can actually get started on the platform for free. Then you can pay $10 a month, I believe you have under 1,000 customers, and the platform takes fees. So on average, anywhere from 3.5% to 8.5% of all sales go back to the business bottom line. That's how the company makes revenue. So the bigger the platform becomes, the more creators, the more revenue that's transacted on the platform, the more money the business will make and can reinvest in the platform and recruiting more creators onto the platform. And so you have this snowball effect where basically you have this compounding growth, which is really, really exciting to be in a business that has that type of a business model. And the traction speaks for itself. Over 74,000 creators that are on this platform that are transacting. In 2020, over 9 million in revenue, and the bottom line net income over $1 million. And I believe when I was looking at the investor materials and I actually watched sort of the open board meeting, I think it was closed actually. I'm not sure if I can disclose that, but for the record here, it was $12 million. It was set on Clubhouse, so it must be legit. $12 million is the current run rate as of March 15, 2021. So that puts it at an 8.5x multiple, which in today's market, you could actually probably raise at a higher valuation cap rather than 100 million, maybe 120, 150 million, because the company is growing so quickly. So obviously traction is there, profitable, growing very, very fast. The pandemic accelerated things. And when you look at the financials, not necessarily the financials like you do in a public market company, you want to look at how much money they've raised, who owns the company, who are the prior investors. And these are important in the public market, but they're actually more important, I would say, in the startup, because you don't want to get in a deal where the founder or the CEO owns none of the company. It's all owned by investors or people who have no involvement in the company anymore, and they don't really care if the company succeeds or not. So in this company's particular case, that is not true at all. They've raised $8.1 million since being founded in 2011, and these investors are the creme de la creme. Kleiner Perkins, First Round, Silicon Valley Angel. All the big names are in this company, and the company's CEO, Sahil, owns 56.8% of the company. So it's awesome that the guy running the show, the guy or girl in any company, if it's the person in charge that has a significant ownership, they have the most vested interest for the company's value to go up. Because remember, a business is trying to increase shareholder value. They're trying to make the company more valuable. And so the fact that the owner at this stage, at $100 million, the CEO owns over half the company, is actually not that common, because a lot of companies at this scale have raised a lot of money and have been diluted already. So the fact that there is a great investor base that's very supportive, can continue to follow on, is very, very impressive and very exciting. And finally, the team. Now, this is actually a huge plus and also a con in my eyes at a high risk, because so much of the business depends on the CEO, depends on one individual. Now, he is a superstar, he's a stud, he built the MVP in a weekend. If you guys are interested in how to take an idea and build a company in less than 72 hours, that's actually what I did for my company, and I made a video about it. I did a startup weekend. Make sure you check it out. I'll put it somewhere up here. But to be able to do that is definitely skillful. He's a hacker, he's a hustler, he can program it himself. He was number 2 employee at Pinterest. He's built a rolling fund. He's in the investment space. He could raise this amount of money, $5 million or 10 million or 50 or 100 million in the future at any point. So he's extremely connected. However, the team kind of stops after him. In my opinion, so much value is by one person. It's a little bit more risky because if he goes away, not really sure if the replacement or whoever steps up inside the company will be able to move the needle like he is. So that is a high risk when you have a superstar CEO, and it is an earlier stage company. This isn't a $100 billion company that has everything pretty much built out, and now they're just trying to take over the world. Trying to take over the world at a smaller scale. And when you have so much ownership with one person, it's great as long as that person is still in charge and they're still motivated. So something to keep an eye on when you're making these investments. And then there's also Entrepreneurial Insight. So ideally you're investing in a business because you believe in the CEO, you believe in the mission, you believe in the vision, you believe in solving the problem that the company is trying to do. And so if that's not the case, you shouldn't really make that investment. Again, they're not investment advice here. This is all for entertainment purposes, but you really want to understand why you're making that investment. So for me, when I think about this company, it's the creator economy. I'm a creator. Maybe you're a creator watching this. Let me know down below in the comments. And so to be able to get behind people like myself and to understand the problem and how fast this market is growing, and people are actually underestimating what's happening right now. And I know this company is growing fast, Teachable's out there, a lot of other platforms, a lot of YouTube creators are making big moves. But there's so much potential here that a lot of people don't even realize. And the compounding effect of that over the next 5 to 10 years is going to be truly incredible. So that is my entrepreneurial insight. And for you, if you're thinking about making an investment, you should hopefully share some kind of insight as to why this business will succeed. Otherwise, if you're not a domain expert, you're not in the domain, it's really difficult to really put your money out there. So for me, I put my money where my mouth is. I invested in this business and other creator type of businesses to support the founders, to support the creator community. So if that's something that you're doing, I would love to hear it down below in the comments. Make sure you've invested in the like button. If you haven't already invested in it so far, it is 100% free to do. It doesn't take you any time. The return on investment was hopefully your time well spent. So go ahead and invest in that like button and let me know down below in the comments if you've invested in this company or what questions you might have. If you're not already subscribed, make sure you subscribe to the channel if you're interested in how to invest in startups, how to build businesses, and entrepreneurship in general. Thanks again for spending some time with me. Have a great day and keep hustling.